We are live with Credit Suite, and today we are going to be talking about the impact of personal credit on business lending. Personal credit and business lending have a kind of a symbiotic relationship. It's kind of a love-hate relationship for some people, for some banks even. So today we're going to talk about what's really what banks are looking at, how it impacts you, what you can do, and then looking for some alternatives to be able to move to be able to offset if you have personal credit issues or if there's things that you're dealing with personally on your credit side. So let's jump in. And as you guys are joining me, give me a hi, tell me where you're from. Love to hear from you. And if you have any questions, throw them in chat. We'd be more than happy to answer them for you and make sure that you're taken care of. But before we jump into this too much further, we have the Business Loan Broker Challenge coming up next week, starting on Monday. And it looks like I cut that off a little bit. But you can register for the Business Loan Broker Challenge at businessloanbrokerchallenge.com. Listen, if you've been to any of our challenges before, they're awesome. They're a lot of fun. We've already got over 1,000 people in our Facebook group who are already getting to know each other, already networking, talking about different strategies for helping out clients, for finding lenders, for finding really cool things. So just make sure if you're interested in learning how to become a business loan broker, or you'd like to add on services to your existing business, it's a great opportunity. It's completely free. It's all online, so something you can attend from home. So check it out. It's businessloanbroker.com, businessloanbrokerchallenge.com to be able to register. Looks like we got some people coming in. Steve, how's it going, Steve? Great to see you on. Kimberly from Houston, how are you doing? Mina from Dallas, Texas. Hi, how you doing today? All right, so let's jump in. So let's talk about the impact of personal credit and business loans. Lenders want you to personally guarantee business loans. It's no surprise if you've ever tried to apply for a business loan, you know they're going to ask for personal credit. This is not anything new. This has been around since the beginning of everything. So, but to think about it, a lot of times when you're getting ready to start a business, you can't just necessarily start a business from absolutely nothing. It's going to require sweat equity of you jumping in, doing the work. It's going to take a little bit of investment to at least get started. You're going to have depending on the type of business you have, you're going to have computer costs, you're going to have marketing costs, you're going to have advertising. There are always going to be costs associated with running a business. So when you're starting to running a business, it's going to require a personal investment. Now, this personal investment can come from several different places. It could be cash on hand that you have. Maybe you've been saving to jump into becoming self-employed, to starting your business. Or one of the other options is when you don't have cash on hand, you can invest with your credit. But banks and lenders understand this. They understand that as you're starting a business, you as the business owner, you as the entrepreneur, you're the one who's getting out there and you're going to have all these massive returns. You're the one with the potential to make millions and millions of dollars, to be able to change your lifestyle, to be able to change what you're doing, to accumulate massive amounts of wealth, to pursue your dreams, to have the freedom that you're looking for. You have the most to gain from it. And so from that means you should also have the most invested into it, because the person with the most invested should be getting the biggest return on it. So, if you don't have cash on hand, if you don't have the money available, that's where you can start looking at leveraging your personal credit. The reason banks want to see it is pretty simple. It mitigates the bank's risk. That at the end of the day, when you're talking with the bank, when you're talking with lenders, that is the number one thing that they want to do. They want to know, are they going to make money, and is this going to be risk? If you can avoid risk, if they can avoid risk, that's really ultimately what they're looking for. And part of it is if you want a business loan, though, but you don't want a business loan to affect your personal credit. Or sometimes we run into the issues of, let's face it, you guys are crazy entrepreneurs. You're out there, you're taking risk, you're living kind of on the edge, depending just on solely what you're able to create. It's personal credit issues happen. It's part of the life. So so what we're going to do is, man, I think I got these kind of mixed up here. So some of the ways that we're going to talk to you today is we're going to help you to look at different ways that you can offset your personal liability, that you can put yourself in a position that even if you have damaged personal credit, that you can kind of work your way up and to be able to have time to repair your credit and get business financing at the same time. But to do that, I want you to we need to kind of retrain the way that we think, because a lot of times as we start looking at getting into business, we see the big giant picture. We see like the Elon Musk, we see the Jeff Bezos, we see all these incredible employers, all these entrepreneurs out there making millions and millions of dollars who are like, I don't personally guarantee anything. Part of the reason for that is because their businesses have built up to the point that they can run completely without them. And so the personal liability isn't near as effective, or even most of the time, it's not even needed as these banks start to, or as these companies start to grow. And it's the same thing with you. As your business starts to grow, you're going to start to find a lot less reliance on your personal credit as your income goes up, as your net revenue goes up, as your profit margins increase, as your assets grow. And that's really what we're going to jump into. So personal credit does affect business credit and lending. So here's why you should care about your personal credit. Now, look, if you're one of those crazy entrepreneurs who are out there who have some credit issues, don't stick your head in the sand. Look, your personal credit is there for you personally, to invest, to be able to grow your lifestyle, to be able to take care of your family, to do what you need to do, to be able to make the money that you need to survive. So your personal credit should always be a top priority for you. The better your personal credit is, the better access you're going to have to personal credit cards, to personal loans, personal finances, save you money on your expenses. And on the business side, it's going to open up opportunities for financing, open up business loans, different types of business credit, working on, give you some flexibility and some room to be able to work on those personal credit. So good credit determines approvals. I mean, just bottom line, if you have great credit, you can get away with not having maybe as much cash flow in your business, or maybe not as much assets if you have good credit. But it can also help you get lower rates. So if you have good personal credit, it's going to lower your interest rates. Interest rates are basically the return the bank is getting for loaning you money. Now, one of the things that's kind of that I've always considered backwards in our financial system is that banks and lenders have this bad habit of trying to charge people more because they have bad credit. And a lot of times when somebody has bad credit, it means they've gone through financial issues, or they're currently in financial issues. And so, unfortunately, right now, if you have bad credit, you're going to be tacked on with additional rates. You're going to have additional percentage points added. Banks are trying to offset the fact that, or offset the chance that you're going to default on it. And that's why they raise your interest rates. With good credit, you can also get better terms, meaning that they can look at it and say, hey, look, you got bad credit. We want this loan paid off in a year. Now they may look at it and go, look, let's give you 2 years, let's give you 3 years, 5 years. They're a lot more willing to work with you on the term of the loan if they see that you've got a good, steady credit history, personal credit history, that's got length, that's got longevity, it's got depth to it. So it's going to help you get better terms, and it's going to give you lower fees, and it gives you the ability to negotiate lower fees. Because let's face it, if you've ever been in a situation where you've had bad credit, you know that if you talk to a lender and they say, hey, look, the best we can do is 20%, you don't have a lot of negotiating room. There's not a lot of other lenders that are out there that are gonna beat those interest rates. And so sometimes if you have bad credit, you're kind of just stuck with what you get. Now, making sure that you have good credit can lower your fees. It can lower the amount that the bank's trying to charge you. It even gives you the ability to negotiate with them, because now you have leverage. Now you've got other options that you can leverage. So the bank's going to potentially lose out on money and revenue without it. So why do lenders even care about personal credit? This is something that for a long time, I've always wrestled with this, but the more you jump into it, I think I've gotten older. I've gotten a little bit wiser. I've lent enough money and not had it paid back that I'm starting to understand it. But lenders really care about personal credit for one simple reason. It's just risk mitigation. And that is it at the end of the day. The banks want to know, am I going to get my money back? And so they want to ensure when they're looking at your credit, they want to make sure that you're not in financial trouble. So what that means is you may have a lower credit score. Let's say you have like a 600, 620 from issues that may have happened a year ago, 2, 3 years ago, that are still kind of holding back your personal credit scores. What the bank's going to be looking at is they're going to look at it and they're going to go, okay, are you currently in financial trouble? Are you trying to get a loan to be able to get yourself out of trouble and potentially cause more of an issue, or what's going on? And then next, they want to see if you can manage payments outside of the business. So if you have a loan, if you get something using your personal credit, are you going to be able to offset that payment? Do you have enough room to be able to make the payment? Now, for example, what they're going to look at is if you have a business that, let's say you're running about $25,000 a month on in the business, and you go to a bank and you're asking for $1 million loan. They're going to look at it and go, look, if we give you this loan, you personally are over leveraged. You have too much debt that you can't repay this loan if you default, if the business defaults on it. So it's not just your scores they're looking at. They're using that to look at your financial situation as well, to determine if you're at risk, but then if you can manage the payments in case something happens to the business. And I think at the end of the day, it's more accountability for your business performing. Because when we look at it and we go, look, my personal name's on the line with this. I don't have any other option. I have to make this work. I have to get this loan paid off. I have to be able to produce and do what I need to do. It kind of puts an extra drive inside of you. I run our Facebook groups and a lot of our social media assets, and I see people all the time. And granted, it's not everybody, but there's kind of a mentality when you have an account or you have a business credit account that doesn't have a personal guarantee, that the threat of it charging off doesn't really impact you the way it does as if it's on your personal credit. Because again, that personal credit is going to impact your family, impact your personal finances, where if it's just on the business credit side, it's going to impact the business, and you may very deeply care about that, but not as much as you will ever care about what happens to you personally and what happens to your family. So I think part of the reason banks like to do this is it gives more accountability to the borrower, to you as the business owner, to make sure the business is running, to make sure it's performing, and to kind of keep things moving with it. And in extreme situations, it's the ability for legal recourse, because you sign on it, you're putting your name on it, you're saying, hey, I'm responsible for this loan if the company can't pay for it. And so it gives the bank legal recourse, knowing that they have options to be able to collect on it and to make good on the money they're borrowing you. Your personal credit is going to affect your business lending. Most traditional lenders are going to look at personal credit even if they don't require a personal guarantee. And this is common as you start getting into maybe secured financing or cash flow financing. There are lenders who are going to look at your personal credit just to verify the stuff we had just talked about, but it may not have a personal guarantee. So your personal credit can still have an impact even if there's not a personal guarantee. And even some business credit reporting agencies use your personal credit score to calculate your business credit scores. The big one for this is FICO SBSS. FICO SBSS is actually it's FICO's scoring model that they use for SBA loans. And part of that calculation, they're looking at your personal credit score as well, and formulating that into their algorithm into what your score. And Experian, I mean, one of the major three, I think the first credit bureau that was ever in existence, actually they look at your personal credit scores as well, and then they calculate it based off of that, and they take that into a factor when calculating your business credit scores. So now that we've gone through all that, here's how I want to help you change your mind. I want to help you change the way that you look at a personal guarantee. One thing that we talk a lot about on the marketing team here at Credit Suite is we talk about using business credit without a personal guarantee to run your business, but then save your personal guarantee to invest in your business. So when you take on this mentality, using personal guarantee, you start to realize it's not always a bad thing. You've got to be strategic in using your personal guarantee. Again, you don't want to just willy-nilly go out there and anytime you see a loan, you just want to grab it. You want to personally sign for it. Be strategic about it. Be smart with it. You can only use it so much. And again, it can have an adverse impact on your family. So you want to be careful of that. You want to separate your business and your personal as much as you can, but also understand that when you invest it, it's got to make sense. So again, only if we're going to the investment side. So only invest when you're confident that you will get a return. When you will get a return on your money, it completely changes the way that you look at financing. A lot of times, like if you start talking with startups, you start talking with companies that are maybe only been there for a year, they're just starting to get some revenue in. They're like, man, if I only had a loan, I could do all these things. A lot of times when we say that, we're not really looking at what is really going to happen with this. If I get $100,000 from the bank, what am I going to do with that? Where's it going to go? How am I going to use it? How much is going into reserves? How can I set up a fail-proof plan that I know that I can get a return on this investment, so that if I get 100,000, that I can turn that 100,000 into 150, 200, 250 at a blink of an eye, pay off that loan, use the money that you have, and start positioning yourself for a better loan for more investments down the line, and keep that growth pattern going. Next, determine your ROI, your return on investment, and your risk before you even apply. I've seen a lot of people take out risky loans, and especially like you start getting into the cash advances, or you start getting into merchant advances, because you just kind of get into a place where your business feels stuck, and you feel like you need to do something, or it may even be on the verge of failing, and you take out a risky loan, and you may buy yourself 3 months, 6 months. But again, if some of the major issues of how your business is operating, what your cash flow looks like, making sure that things are actually running the way they're supposed to, that things are being paid, that your taxes are being paid, that everything's being moved the way it's supposed to move, these types of loans can have a big risk on them. So when you're looking at this, you have to understand, what is your return? How much money am I going to get back? And what kind of risk am I exposing myself to? Because if you start small, if you look at it, go, okay, you know what, I'm going to personally guarantee for a credit card, it may be a $10,000 credit card. And a $10,000 credit card with a minimum payment is something that you realize, you know what, it's a little risky, but I know that in my current situation, if I have to go back and get a job, I can offset that. I can pay that off. It's going to suck, but I can still do it. So understand what your risk is, determine that risk, and make sure that it's something that's going to make the most sense. And a big one that I can tell you, don't borrow on speculation. Borrowing on speculation means that you think something may happen if you get the money, so you go ahead and invest to get that money, and you don't have a solid plan. A great example of this, I know Ty's talked about this, of using loans for investing into marketing. If the way that I like to look at it is, if you know that you have a solid campaign, you know that you've got an ad campaign that's consistently producing great results for you, at that point, you're no longer speculating. You now have quantifiable proof that you can invest money into this ad campaign, and it turns into like a cash machine, like an ATM, that you can drop $10,000 in it, and it's going to produce you 20. That's what it means to really know your risk, and that's what it means to not be borrowing on speculation. Borrowing on speculation may be, I'm getting started, I need more money, I want to get a loan so that I can run ads, but you've never actually ran an ad, even at a minimum, $2, $5 a day. You don't have any idea what the verbiage should be. You don't know if your systems are set up to be able to handle it. You're just getting out there, and you're just trying to get stuff in for the sake of getting stuff in, without actually testing it, trying it. But making sure that you've got a solid plan, making sure that you're actually investing the way that you should, making sure that it's actually going to give you that return and mitigate your personal risk, is a great way to be able to offset the risk of using your personal guarantee. Using a personal guarantee isn't always bad. Change the way you view your personal guarantee. You have the most to gain out of a business loan. Again, I said this at the beginning, but I think this is very true, and something that really resonates with us as entrepreneurs. When you get excuse me, when you get a business loan, you as the business owner have the most to gain out of anybody. You may be hiring employees, there may be people that you're bringing on your team because of this, that you've been talking to for a while. But at the end of the day, that team member is there to produce a return for you. that team member is there to be able to bring more value to your business than what you can bring by yourself. But at the end, but when it comes down to it, you're still the one who's getting the profit. You've got the assets inside of the business. You own the business, and as the business grows, you have the most to gain. And be proactive in borrowing by getting money, by getting a loan before you actually need it. A lot of times I see that the business owners will come and they'll go, hey, I need a loan. I'm kind of upside down. I've got to try to turn this around, or I'm going through a slow spell. Don't wait until you absolutely have to have it, because a lender is going to look at your personal credit and go, nah, you're kind of upside down already. Your business finances are starting to regress. We don't want to do that. So be proactive. Think through your planning. Look at your budget for a year. Look at, like, if you've been in business for a couple of years, start looking at your peaks and valleys. Start looking at your financial cycles that go on with your business. Like, we know that here at Credit Suite, that with us being in the business that we're in, that the end of the year, Christmas time, starts to kind of slow down for us. Q4 is kind of a wind down, and then as soon as taxes start, people start looking at people start getting into the next year's business goals. Our numbers go back up, because at the end of the year, people are thinking Christmas time, holiday, family, and so the mind shift kind of goes from business investment into personal investment. So if you know this kind of information, if you start looking and planning on it that way, now you can start to fund and finance your business proactively, not just looking at it from a this is what I need and a knee-jerk reaction, but you start thinking through what you need. So let's talk about if you're one of these people, like Colleen's been commenting, she's trying to increase finances to fix personal credit issues. Let's talk about some things that you could do on the business side to offset personal credit issues. We're not a personal credit company. We just focus on business credit and business lending. We have some videos out there that we talk about different ways that you can improve your credit personally if you need them. But there's a lot of great people out there, a lot of great people in the credit repair space, a lot of credit experts out there who can really give you some insight on this. So let's talk about, from a business standpoint, how you can offset some of the personal credit issues that you may be dealing with. And the first one's going to be this: build strong business credit. Strong business credit can reduce the impact of personal credit, because now now a bank and a lender is not just looking at one credit report. Now they're looking at your personal credit report and your business credit report at the same time, meaning that if you have personal credit issues, they can look at the business and go, yeah, okay, the personal credit's a little bit weak, but you're spending thousands of dollars a month on supplies, and you've got a year of consistent payment history. It goes a long way. More people look at your business credit than you will ever realize. Having business credit is going to help offset personal credit issues, and not only that, it's also going to give you the tools and resources you need to be able to add to your business and be able to run your business even without a personal guarantee, which is part of the reason we love business credit so much. And the reason banks love it is because it's an unbiased third-party verification of your payment history. There's nothing like somebody coming up to you going, hey, yeah, I'll pay you back. I pay my bills. Yeah, that's cute and all, but show it to me. Give me proof. If I don't see it in writing, it didn't happen. So if you can provide proof to a bank that, look, my business has the ability to pay loans. Yes, I may have some credit issues from the past, or divorce, or things that have happened before, but my business is able to stand on its own. My business is self-sustaining. So business credit goes a long way for doing that, and it shows proof of cash flow and responsible use. And if you guys want more information on building business credit, we just dropped a link in the chat there that with a link to our free guide. It's at creditsuite.com/EIN. You can download our free guide on building business credit if you need help jumpstarting that process. The next thing you can do to offset your personal credit issues is build usable assets. Assets can be used to secure financing in case of default, but not only that, banks like to see that you have assets so that if something happens, you can secure the loan and you can pay it off. So if a bank looks at it and goes, hey, this person has $1 million in retirement and we're only loaning them $100,000, they know that in a pinch, in a bad situation, if the worst case scenario happens, that you have the ability to be able to access that money in some capacity, and that their ability to be able to repay that loan, or your ability to be able to repay that loan, is now way higher because you have those assets. So some of the assets that banks like to see: cash on hand goes a long way. That's a huge one. Stocks, bonds, mutual funds. If you're investing in the stock market, if you just have personal investments, if you have business investments, if you have cash on hand with the business, and you would like for and you can make a return on your money with that through the business. Equipment. If you have equipment, buying equipment is a great way to be able to have an asset that you can use as well. And open invoices. If you're a company that's billing your client based off of invoices, those invoices could actually be used to used for factoring, and banks will actually take those over and go through the collection process and take the money from those invoices to be able to secure a loan as well. The next one, build massive cash flow. This one is not, I can never stress this enough. Even in lending, cash is king. Cash will always be king. The ability to make money, the ability to have cash on hand will always go a long way. With that, build as much as you can with what you have. A lot of times, as business owners, we start looking future wise. We start future planning everything. We start looking at, I can do this. When I get here, I can do this, or look at this opportunity, or look at this, or we can do this, and we can do this. And we start looking at all the things that we can do if we have more money. But a lot of times there's so much more that you can do just based off where you're at right now, that if you just dig in, if you just press in a little bit more, you get a little better at what you're doing. You get a little better at lead development, at lead generation, at closing sales, at actually performing the services that your clients are hiring you to do, or you can raise your prices. There's a lot that you can do with what you have available to you right now to be able to build your cash flow, because at the end of the day, cash is still king. Business banks want to see that cash flow. And if you have way more cash flow than you need, and you start the amount that they're borrowing you starts to look a lot less of an impact. So for example, if you're running $1 million annually and you go to a bank and you ask them for a $50,000 loan, they're going to look at that and go, yeah, okay, that makes sense. That's less than a month's worth of income for you. This should be able to be repaid back easily. So build as much cash flow as you can. And then from there, focus on keeping your expenses as low as possible for better profit margins. If a bank looks at it and they go, man, you've got great profit margins and we're seeing a steady increase in cash flow, they love that. That is a great way to build confidence, to build a reputation, to build the relationship with the lenders that they're going to want to see for it. So let's talk about some of the lending options for credit issues, because again, that's what we're here for. We're here looking for business loans. Business loans with flexible personal credit qualifications. We talk about these a lot, but it's definitely worth covering. So cash flow financing. Again, cash flow is king. If you get that cash flow up, there's a lot of options with cash flow financing, and this can include merchant advances. It can there's PayPal if you're running PayPal. There's a lot of them now are actually really cool. They have software that will just connect to your bank to be able to verify your cash flow, and you can get money with this super fast. I mean, I've seen approvals happen in hours and then funding happen in 24 or 48 hours. So cash flow financing, merchant advances, anything that you can leverage that approved cash flow that you're working on is going to go a long way for helping you get approved for funding. Now, as you're looking at these types of funding, before we jump into the other ones, as you're looking into this, you're going to start to realize that these are going to be a little more expensive. They're not going to be the best rates. They're not going to be the best terms. But again, what we're doing right now is we're offsetting your personal credit, giving you some breathing room, helping you to generate more money, getting a good return on what you're investing into it with what you have, and giving you a chance to grow and giving you some time to be able to work on any issues and to be able to keep moving things forward. Secured business loans. Again, if you're building those assets, you can use your 401ks. You can use stocks, bonds, mutual funds, equipment. You can use open invoices. You can use all these assets that we had just talked about building to secure a business loan. And the nice thing about the secured business loans is that the rates are really good, the terms are good, and these are some of the loans that a lot of times they'll look at your personal credit but may not require a guarantee. So if you have those assets, if you have some of those things, this can be equipment financing, invoice factoring, different options with that. The last option we're going to talk about is a little bit different, and it's a credit line hybrid. And I'm going to use this as an example. So with the credit line hybrid, there's this amazing option that you have with a credit partner that, like, if you know that you're really in a position, or you have an amazing opportunity that's already committed, that you just need the funds to be able to kind of advance, keep things moving, you can bring on a partner for your business. And what we call this is a credit partner, somebody with great credit who can actually invest their credit into getting the loans that you need. So you have the ability with the credit line hybrid to be able to have a partner. Now that partner does need to have some ownership in the business, and I believe it's about 10 to 20% of ownership in the company. But these assets, you're able to actually use that credit partner to be able to qualify for things like $150,000 worth of credit lines with 0% interest. So there are options, no matter what your credit is, no matter how much you've been through, no matter where you're at. There are a lot of options that are available to you that you can actually use to be able to grow. And then the goal of this is, while you're looking at some of these options that maybe don't have the best personal credit's not as much of an issue, these are going to be alternative financing, which means, again, the rates are going to be higher, the fees are going to be higher, terms maybe not quite as favorable, but it's also a building block to be able to get you to that point where you've got the revenue, you've got the cash, the credit, and the collateral to be able to get approved for, like, the SBA loans or traditional bank loans, where you can get up into the millions, where you can get that really cheap rates, you can get the good fees, you can get the longer terms. So these are stepping stones that you can use, or like as transitory financing, to be able to take you from one place to the next. So if you want to find the best lenders for your situation, contact us. We would love to help you out. You can give us a call at 877-600-2487. What we do is we sit down with you, look at your financial situation, look at your business, your credit, look at all aspects of it. And then from there, we help you find the lenders that you can qualify for right now, and then help you set up a business plan to be able to move things forward in the future, and to be able to get that prime financing, that traditional loans. And then with that, you can also get access to the tools that you need to quickly build your credit. If you'd like to find out more, you can get a free business financing assessment with us at creditsuite.com/consult. We also are sharing the links inside of the chat, so feel free to check it out there. We would love to help you out. And if you need anything, again, give us a call, 877-600-2487. Now, if you like helping people, and you got a lot from this, and you think this would be beneficial for people, feel free to share this, and you can use hashtag Business Credit Toolbox, and you can get up to 5 free tools to easily and quickly build your business credit that's not linked to your credit, that's not linked to your personal credit. So it gives you some breathing room while you're working on your personal credit. It's our way of saying thank you for sharing, helping get our message out to as many entrepreneurs as we can. So if you like this, make sure you like it, comment, share, all of that stuff. And if you share it, use hashtag Business Credit Toolbox. And if you want to learn more about how this works, check it out at creditsuite.com/toolbox. That's all I got for you guys today. Thanks for hanging out. And again, if you want to learn how you can offer business loans, make sure to join the Business Loan Broker Challenge. It starts on Monday. We've got some amazing speakers there covering everything you need to be able to start as a business loan broker and really take off. And we would love to see you there, see you in the group, start interacting with people. And so until next time, have yourself a great day, and we